this is the latest report that came out, October 2021.
Yeah.
They came out with a study of the fastest growing neighborhoods in Florida. GC, what do we want to know about this?
Yeah, this is from Zillow. And this is the first time I've seen them break it down on a neighborhood level of the fastest growing neighborhoods. So I thought this was like godsend for me and for JWB and for
proving the point you've been trying to prove forever.
Because it's really hard to get neighborhood specific data that is trusted and that is macro level. You know, we have all this data when we look at how these neighborhoods have performed and all that. So I thought this was great. But this report came out in 2021. What it did is it looked at every neighborhood in the state of Florida and it identified the 21 fastest growing neighborhoods. And the data that came from that was really convenient, we'll say. So next slide. So out of the data,
this is 21 markets, 9 of them in Jacksonville.
Exactly.
Right. Well, 21 neighborhoods, 9 of them in Jacksonville.
Thank you.
Out of the 21 neighborhoods, 5 cities.
Only 5 cities made the list. And of those cities, 9 of the neighborhoods were in Jacksonville. But it gets better and better. The fastest growing neighborhoods in the state of Florida, 9 of them were here. And I just want you to see, I'm not going to tell you exactly about this neighborhood yet. Well, I will. These are JWB neighborhoods, right? I'll do that. But we're going to talk a little bit about what type of neighborhood it is. Is it workforce housing? Is it luxury housing? You know where the ship's going to sail from there. But these are neighborhoods, and they're the names that we may call them if you live in town here, right? Lackawanna, Mixon Town. This is all what we would call JWB's 4 core neighborhoods here.
Yeah. All right, so let's talk about these characteristics.
So I wanted to help you guys see what are the differences in types of neighborhoods. And if you are maybe a newer investor or maybe a little bit more savvy, you might have heard of different characteristics: A neighborhoods, B neighborhoods, C neighborhoods, and D neighborhoods. It's an easy way to kind of characterize the qualities of a neighborhood. And so you can look at home price level, income level, the age of the homes, school ratings, amenities, and then violent crime. These are just things that I chose to help give you a picture of what an A neighborhood looks like versus a B, C, or a D. When we're talking about luxury housing, we're talking about A neighborhoods, right? So think of the age of the homes being young, right? So new construction is very common. Think of the best school ratings. Think of the home prices as being the highest. And in terms of violent crime, there's a very low amount of violent crime in your Class A neighborhoods. As you start to look over into Class B neighborhoods, that's where your above middle income neighborhoods are. So the home prices are still higher than the median, but they're not as high as A. School ratings are generally still very good. Your age of homes, you have a little bit more of a mix of new construction and renovations. And of course, your violent crime is still rare in your B neighborhoods. Your Class C is where that workforce housing is.
The Goldilocks zone.
That is the Goldilocks zone. But if you're just looking at this graph right here, you might not say that is just right? Let's look at what these characteristics are. This is this different lens that we have to have when we're identifying what is a not your average investment for you. So you've got home prices, which are below the middle, which is great. Your income levels are below the middle, which, okay, if prices are lower than the middle, we can deal with that. You've got older homes generally. Your school ratings, which I hear a lot. Oh, is it okay for me to invest in the neighborhood that doesn't have the great school ratings? Well, in workforce housing, guess what, everybody? You're not going to have A-rated schools, right? It is a part of investing in workforce housing. So they're below average to low school ratings. Generally, you don't have amenities, so there's not, fantastic shopping destinations around. And then violent crime is still very rare in these neighborhoods. Class D, on the other hand, is where we would call low income. So low house price, low income level, older homes, low school ratings, no amenities. And yes, there is a higher rate of violent crime in the Class D neighborhoods.
Got it. And then this is what it kind of looks like, right? There's like A, B, C, and D.
Exactly.
Right. So this looks a lot like the first home.
But if we just started this conversation, and maybe you all can ask this to yourselves and answer it for yourselves, right? If we just put these 4 pictures up in the beginning and said, which has more risk? How many of you, if we're being honest, would have said Class C has way more risk than Class A? So this shift, right? What I want to help you do is not define risk based on what your eyes see in a pretty picture, right? We need to identify risk based on numbers and look beyond what is just on the surface. And so Class C neighborhoods, workforce housing, that's where when you actually start to peel back the layers, risk mitigation is built in by who you're serving, home prices, and the ability for people to continue to have demand for renting in those neighborhoods, no matter what market conditions come our way.
Love it, man. My takeaway here is that it's a supply demand game. There's two types of supply. There's the housing supply and the resident that wants to live there, and then there's the job supply and the income supply for the resident themselves, right? And this idea of workforce housing being in this like Goldilocks zone of always having very stable demand, right? Like it's not a very elastic demand. It's always there.
Right.
The jobs that they tend to work at are pretty stable jobs that, are always going to be spent on in good times and in bad, healthcare, school, military, stuff like that. And this message of risk mitigation as an investor to me is very, very attractive, right? Like, and then beyond that, it's the price to rent ratio, right? Like the idea that when it's in this zone, then it hits that sweet spot of rent and price that I can afford that makes it very approachable for like a normal person like me to get in.
Absolutely. And we haven't even talked about another large advantage for focusing on workforce housing from the investor perspective. How about the fact that it costs significantly less to get into this asset, right? If you're thinking about investing in luxury housing prices are probably going to be about $550,000 in Jacksonville. That's going to be a down payment of, call it around $175,000 to $200,000. So the threshold, the barrier even to get into luxury housing, even if it had less risk, even if it was a better investment, it was going to cost you twice as much to get into it. So, all of these things combined really make this workforce housing asset better on risk mitigation. But I also wanted to point out that it's not just risk mitigation. This is another misconception. Many people look at the picture of A, B, C, D types of houses, and in their mind, they say, well, Class A must appreciate more than Class C. And guys, the data doesn't show that. And that's why the Zillow data was so incredible. It's because, now this is from 2021, it's the last time they've done the study, but the fastest growing, that's another way of saying the highest appreciation has actually come from Class C neighborhoods in the entire state of Florida. The number one neighborhood for home price appreciation was a Class C neighborhood. All 9 neighborhoods in Jacksonville that were 9 of the 21 fastest growing neighborhoods in all the state of Florida, none of those are in luxury.
Yeah.
All 9 were in Class C neighborhoods, which is where JWB has been investing for 18 years, which is where we put all of our clients. So when I saw all this data to support what we have been saying for such a long time, I thought it would help give a little bit more credence behind not just that this is a less risky place to be, but there is also more upside here. The kicker here is you just have to train your mind to think differently. You cannot make pictures be the decision-making for you. You have to get comfortable with somebody looking at what you're investing in and saying, really, you're investing in that?
Yeah.
If you can get over that, you get all these other benefits. Yeah. And so hopefully this helps.
When you talk benefits right now, GC, I can't help but think about this idea of impact and how, we've got the summit coming up and we've been preparing, and it's this painting this picture that real estate investing, real estate development doesn't have to be a win-lose, doesn't have to be a win-win. It can be a win-win-win, right? Like we can create multiple wins. And what I'm hearing a lot here is, and I keep hearing about, is the affordability crisis. Things are getting more expensive for the average American. And when I think about workforce housing, I think of it as like the solution for this, right?
Exactly.
Like we need more of these assets. We need more people to fund these assets in order to build them, in order to house the folks, because people that are starting families, right? Like young millennials, Gen Zs right now, some of them don't think that there is a housing stock for them.
Right.
Like they don't see it happening for them. People are getting pinched everywhere. And the need for this asset class to exist and to do well and to have companies that are real professionals and world-class companies managing them, to me, I think is a macro huge thing that, as an investor, it doesn't affect my pocketbooks, but it makes me feel good.
It should make you feel good.
Yeah.
It is the number one problem facing our country is housing affordability. And to know that you're a part of the solution should make you feel good. You're a big part of the solution, especially when you invest in a JWB property, because when you start to invest in a JWB property, you're not just doing this to make your life better. You're making more housing available in the area that is most needed, right? There's only one way that JWB can build over 400 homes this year, and it's through your investments. That's what keeps the lights on around here. So every time you make an investment to buy a JWB rental property, you're helping to solve the housing affordability crisis. And beyond that, what many people don't understand is not only do we sell homes to investors at JWB, we're the largest provider of affordable housing for sale inventory in our neighborhoods as well.
Retail, your retail branch.
Yes,
Yeah.
retail. We sell about half of our homes to owner occupants, and they're in the same exact neighborhoods. If you run a search on the multiple listing service for housing that costs less than $300,000 in Jacksonville, you're going to see JWB homes over and over and over. We sold the most on a percentage basis out of anybody else in Jacksonville last year to folks living in workforce housing neighborhoods. So that's what you're a part of. And I don't think that many people understand the ramifications. They look at it, or they might have preconceived notions about investing in workforce housing. But guys, you are doing so much good by investing where you are. And I want you to feel really good about it.
Message, man. Good message. So if you want to feel really good about investing, go to chatwithjwb.com and start your investing journey, right? Or shoot an email to info@jwbcompanies.com, right? JWB
Well done, brother.
I don't always.
You've only been doing this for 4 years.
I
so.
don't get that email right every time.